All right, let's take a quick look at the crude. We've got the report coming out in just a few minutes. And what a spike in crude, fellas. Look at that. So either somebody knows something we don't know, or you got some high frequency systems banging the beehive, what we call banging the beehive, trying to shake up things and take opportunities. That yellow dot that you see up there at 4201, that means yeah, they're banging the beehive. That's all that is. That's short-term overbought. So who was it? Dennis asked me where the risk of volatility. I would say the risk of volatility is to the upside. Let's see if I can find the right chart. Here we go. So you can see it had been trending down. It's been in a box, range box. It's towards the low end of the box. It could go in either direction. If it does come down, you're looking to test this lower low around 48. I'm sorry, 40, 45 level, 40, 41. And you've got a real nice potential to the upside, in my humble opinion. If the number surprises, you might see some short covering. And there would be a target. They could break here, or if they sell it, this would be the first stop. So that's my take on it. While I'm here, I'll go ahead and show what the architect is doing and the DMS market sentiment indicator. We started out mixed markets. This right here is markets conflict. My apologies. Markets in conflict. We had mixed markets and markets in conflict yesterday as well. And a few minutes ago, well, not a few minutes ago, about an hour ago, we had risk on kick in. These are the bonds heading down. These are the stocks that are consolidating in a tight range, but in bull territory. These are the trades we had earlier in crude. This was good for 90 bucks per contract and $120 per contract. That's the two contract. What else did we have? We had a big winner. That was 3 contracts at 500 bucks each in gold. That gold short, that was sweet. The euro trade that I mentioned that I didn't like where the signal was. It was way too low. It's still open. I don't have the Russell in this program. Well, we finally got a breakdown on natural gas. There's natural gas breaking down. That should have been a signal. I don't think I have the automated system on. But that should have, yeah, no, that was in from earlier. No, I didn't take this signal. I took this one earlier on. But that should go pretty close to target, 2.156 probably. I'm sorry, 2.159 or 2.160 right up here, right around here, a couple ticks above that red line. There's the natural gas 30-minute. It just took that trade. And we've got another 6 minutes before crude oil inventories. Let's take another look at crude oil inventories. Oh, by the way, this is something real important. Mark, to answer your question, the contract for natural gas is January. This stop is 20 ticks. Profit target is about the same. This already happened. We're not in this. Let's go back to crude. Turn this off. I use the 240-minute chart to help forecast where prices could go. So this is sitting in the middle. I think there's a better chance of short covering and therefore pushing it higher. That's where the risk of volatility is, because you've just got so many people that are short crude that I think to the upside could be the risk of volatility. And here it is. It's got a lot more room to the upside. If it breaks that high, you're looking at a $700 move to your target at 42.72. And if it breaks that low, you're looking about you're looking at about maybe 400, 500. All right, let's see what happens. My chart froze. Give me a second. Reloading the chart. That chart froze. There we go. Three minutes for crude oil inventories. Natural gas continues to work its way down. I think I have it somewhere around here. This was the trade on the larger time frame on the 30-minute that was successful earlier. Two minutes for the release. Martin, you took the trade. Scott, you took 14 ticks out of natural gas. So Scott, you're letting it run, the natural gas? Martin, that sounds about right. Now, if it was me, if it doesn't run in the next few minutes, I'd be out of it, but don't know if crude will have an impact on it. It shouldn't. Sometimes they do if they're both contingent on on certain things, but not right now. I don't think so. There we go. We're 1 minute away. I'll leave natural gas here for you. Martin got in at 2.179, I believe he said. Scott, you're in it. You're in the trade from Einstein, and you're letting it run, right? Martin's going to let it run to 2.161, which is pretty close to my 1.60. Way to go, Martin. Looks like you're going to get it, Martin. Looks like you're going to get it. You're getting a little bit over short-term oversold marker, but that's okay. That's normal. I would trail it, Martin, if I were you. At least move it to break even, plus a tick or two to cover your commission. Scott, Martin is wanting to know, where is your profit target? I believe he's looking for a trailing stop. For those that don't know Scott, that might be new in the room today, Scott trades 3 contracts or 3 positions with the same entry, 3 different exits, takes 9 ticks on one contract, 19 ticks on the next, and the next one he trails it. This is the one he's letting it trail, what he calls the runner. And we got crude oil inventories out at 1.18 million barrels, and the market is not budging. Market is not budging. High frequency systems were banging the beehive probably, what was it, 10 minutes before the report. And they're done. They're not doing anything. Let's see. You might get a little trade here, a short. Something took profit. Something took profit. Where's my crude 30-minute? Where's my crude 30-minute? Where's my crude 30-minute? Is this it? No, that's the euro. Here we go. The euro 30-minute went short again. It had gone short, took profit at what's that about 41.30, and now it just went short again right around here. Martin, I hope you're trailing it. All right, folks, I'm going to go ahead and shift over back to the other computer with the other platform. So we'll see in a little bit.